All right, everyone, welcome back to the Sand Pit. You're here with Sandy tonight. Tonight we're going over ascending triangles. Now, I've just pulled up any chart. I chose a Forex chart because basically there's just lots of ups and downs. Good, easy content for us to show you the concept between a ascending triangle, how we use it, what we look for, why we use it, most importantly. It is a technical analysis tool that we use to find an area where the stock or chart will push into. I'd like to say more likely than none pushes through that area or turns from that area. It can do both. Just because it's ascending, it doesn't mean that it's going to push up through. Okay, if the stock doesn't like the price, it will reject it and it will push back down. Now, very important, just like everything that I've gone through so far, and every day we trade, even at nights when we're just general chatting, we're always going on about support and resistance. Support and resistance is the number one key to being able to chart effectively. If you don't understand support and resistance, you need to go back and learn it, because ascending triangles, descending triangles, equilateral triangles, flags, double bottoms, triple bottoms, double tops, triple tops, head and shoulders, it has everything to do with lines, and we use them to even project where the chart is going or where it's going to go. So I can't emphasize enough on how important support and resistance is. As you'll find out, if you get lost, please tell me. It sounds like we need to do some more support and resistance webinars or some more training, or you can ask me for I've got a special webinar tucked away that I charge for a small fee. And I do that because it shows me how serious you are about trading. If you can't invest in yourself, then what are you investing in? Okay? All right. So first thing I'm going to do is this is the daily. Let's start on the daily. Big numbers first it makes the concept easier. We're going to lay out some support and resistance, and we're going to throw some ascending triangles up. Okay, let's make a start. It doesn't matter what color you do them. Let's just find some lines here. So for an ascending triangle, let's just find the bottoms here. Let's say that's bottom. Now, you can see it's basically you just got to find an uptrend, ascending. So we use it for uptrends. Descending we use for downtrends. Very, very simple concept. Get your trend line. Well, hang on there. We need to cap it off. So to cap off an ascending triangle, you should use more than 2 points. Okay, using 1 point doesn't work, because you need to make sure that you've got a level there that you can project as support. So basically, we want to find something between two tips. Okay. It's kind of pointless using the top here. You can use the top, but really you'd be using something down here and projecting something to push through. So we've got some support there and we've got some resistance here. So I've used support over here, we've got resistance, more support. So we've got 3 to 4 points, which is good. We know that's a great point of resistance and support. Grab a trend line, throw a line up, and place it there. It's that easy. Here, if you just draw an angle in the corner, and if you wanted to be fancy, you could always cap that off. That there is what we call an ascending triangle. 90 degrees, pushing up, following the base of the trend. Now, if we zoom in a bit closer here, let's pull this back. You've seen a lot of my charting. I'll put this little, I put this in as just like a little squeeze. It indicates that when it gets into this area or close to this area, it's going to look at squeezing. it's very simple. Basically, you can see the stock. Yes, it dips down. That's fine, but it touches here again. This is the area because we've got this large line of support and resistance. Then this is the testing point. You can see here it's tested it twice. If you haven't noticed there, we've also got a flag. So a good indication, a good bullish indication that it's going to push through. I don't have volume up here. Let's get the volume up. Pretty even volume. So no real spikes in volume. So I'm not too worried about the volume then. But these are indicators that we use. The dailies are a little bit easier to read. I'll take you down into like the 1 minute, 5 minute, and show you it gets a little bit more hectic. But basically, before the stock breaks out, you draw your line up. You can use old data. A lot of it just comes from old data. Draw your line up, watch the stock. Now, just because it's bullish, well, the flag certainly helps. But if it's not ready to push through resistance, it's just going to come down and find support. So again, this is where you need to lay out your support lines. Okay? Depending on how fast it was rejected, you need to know where it's going to come from. Sometimes what they'll do is, if they're not ready, they'll push back down, they'll find support, run along support for a while, have another go. Or they'll push down, as in, I'm not ready, you'll get sellers sell off, the stock will continue to go down until a major support line or a major consolidation line. In this area here, this would be your major consolidation area because you have 1, 2, 3, 4, 5, 6, 7, 8, 9. If you go and count all the candles, this line would have the most amount of touches, and this is why it's the strongest. The more touches support or resistance get, the stronger it is. And we've seen that today with some of the stocks, MVIS and OGNC. We watched them come down, and they actually hit my lines that had the most amount of support and resistance. Just price action, prior lines that we used. Okay, that's a daily. A daily is easy. Big, curvy, nice and curvy. Let's delete that. So we've got major trend lines. Let's just jump straight down into the 5 minute. Okay, where's a good spot? It's not really a good spot. It's a flag. Here's a good spot. Okay. Support and resistance. No, not that one. Okay, got some lines up there. We need a base. Let's just throw a base there. Okay. Basically, all you do is throw a line up. So we've got 2 points. You need to have it between 2 points. And it's just like my trend webinar. Follow the trend up. Now, you can use this at every resistance point if you like. I don't tend to it. Usually there's certain areas that you'll find, like when you start charting a lot, you'll find areas where you actually really want to use it. Now here, if you know this is bullish, but if you look here, using the 1 minute you could, but basically every step up is a triangle. Every step is a triangle. So I don't want to zoom in the 1 minute because it'll take me to the right. But this is how easy they are to use. You can see it's pushed back through but come back down, and they tend to do this. It tested it. You can see it sat on support, didn't like it. Push back down, push back up through. Here, you can see here the consolidation underneath. consolidation underneath is good. It means it's testing, testing, testing. Just needs a little bit of volume and a push through. Yeah, you can see a little bit higher volume here with a push through. Here it didn't like it. We had a sell off. Again, push back up through. But this is something to watch. And we use these to... Ascending triangles are used for entries, basically. If you wanted to wait and find out whether it's going to push through or not, you know, you could have your entry at this support. You know, when that... Don't forget with candles, it's not... You're not going to move through until the bottom of the candle is over the line. So... Is there one here that's been rejected? No, you got to be careful. You would not make a move on this candle here because it's halfway through the line. These here can fall down quickly. If you're going to make a move or put a trade in, these are a good area. A good area would be potentially the last. You know, if you weren't too sure, but you've seen it was really bullish, and the last area would be here. This is where you'd buy in for the push through. Or if you wanted to play cautious, watch it push through. And then when the next candle that has its arse end over the resistance line, that's where you make a trade. That there says, I'm ready to go over and I'm going to continue to push, basically. But that's what it means. Okay. 1 minute. Right down into the 1 minute. So there is ascending triangles everywhere. Here's a good one. In there. So you can see this is like a huge high. What's this? This is a 1 minute height of the day. I don't know if you zoom out. Okay, so currently this is the trading zone. All right. I have a rectangle here. So what I'm talking about trading zone is for people that are day trading, this is a zone that we use to buy and sell. So it's a repetitive movement. Repetitive. You don't have to go that high. If you look at the range of movement, I would say that would be our trading zone here. So you buy, sell, buy, sell. You can ride it to the top, or you can get out once it gets through, let it ride down. And all you're doing is buying and selling in this zone, okay? But what we're looking for is we wanted to see it push higher than this resistance, and this is why we use ascending triangles. What we do is we think, oh, this is getting high, this is getting high, this is nice, this is going to break out, this is going to break out. We draw our ascending triangle, we have it in here, and we get ready, and it fails. It's basically not ready. So it coincides with the trends, picking up trends for each stock, but it just gives us a better indication of where it's potentially going to break out. It just helps us track, helps us visualize what the stock's doing. That's basically it. I'll touch on descending triangles in another video, but for now, short and sweet, that is ascending triangles. Does anyone have any questions before I close out? If you don't understand it, please PM me at any time. We can run you through it. We can go over it. Again, support and resistance. You can see how key it is. Everything is based off those levels of support and resistance. Honestly, can't say that enough.
Hey, Sandy.
Yeah, go ahead.
So you're saying, so once the candles start getting closer to where the that angle is there,
yep.
right?
Yep.
That's when we start looking to see when the 1 minute or the 5 minute goes past the resistance line, and most likely that's when it may take off.
Yeah, and you can
okay.
You can use the 5 minute. Look, if we zoom out a little bit, you can still use the 3 minute. You can use the 5 minute. It just means that it's longer intervals between your candles, that's all. So the 1 minute will give you a better indication of how bullish it is while watching the candles. And you can see here we had a double bottom. I would have expected that double bottom to hit this and then come back down and potentially then break out, but it wasn't ready. So it's all up to you. It's all up to you on what time frame you want to watch as well. Don't forgetting each time frame you choose, it just means the intervals between candles renewing themselves or waiting for the next candle. The interval is longer. So I tend to watch everything when I'm waiting for something in the 1 or the 3 minute. Right up close in the action. And just for a bigger, slower swings, you can push out to the 15 or the 5, even the hour, just to get a good grasp of the whole map itself. You can't just focus on the 1 to 5 minute. You need to pull yourself out, get into the 1 hour, the 4 hour, even the daily, and just have a look what the stock is doing, because you don't know where it's going in the 1 minute. At the moment, it's just going sideways. You know what I mean? But when you zoom out to the day, well, it's currently running sideways there, but it was in an uptrend, and it's still in an uptrend. If you draw a line here, that's still in an uptrend. So when you've got lines on top of this, and then when you zoom in, because this is still in an uptrend, what you're looking for that ascending triangle is you're looking for a breakout. That's what you're basically doing. Oh, this one is so steep, isn't it? So basically you're looking for that breakout. Like I said, because you are in an uptrend, what you're really looking for, you're waiting for that to break out because it's in an uptrend. You want to see it go higher. Does that make sense?
Yeah, that makes sense. Thank you.
Okay. You have to know what the entire chart is doing. No point hanging around the 1 minute. It tells you nothing. It just tells you in the moment, the 1 minute. Okay. One day, look, it tells me uptrend. So that's why we look for breakouts on ascending triangles in uptrends. And when we're in downtrends, we'll use the descending triangle for different reasons. And we'll explain all that in another video. Any other questions? All right. Well, I hope that clears up a few things. Hope I've explained it well enough. If you enjoyed that, give us a like, hit the subscribe button, and we'll see you next time. Thanks for tuning in, everyone. Don't forget, don't panic, chart it.